All right, all right. Well, thank you for being here. We're very excited to have you here at DavosWeb3. I'm Aly Madhavji, managing partner at Blockchain Founders Fund. We invest in, we've got over 200 portfolio companies now in the Web3 space. We also recently had a TV show come out called Crypto Nights on Amazon Prime, which you could check out. It's kind of like a Shark Tank for Web3. And excited to have this incredible panel here. So we are missing one. Adiola could not make it, so you may see credit up there. He couldn't make it. He's running a very impressive company in the fintech and stablecoin side, so basically doing remittances on USDC rails. They're doing billions of dollars in remittances now, and also have really cool credit products both in Sub-Saharan Africa as well as in the United States. But without further ado, we've got Jeffrey here. Maybe you can do a sort of a quick intro, and then yeah, we can go from there.
Great. My name is Jeff Schwartz. I'm founder and CEO of Identity. We're a digital identity company. We primarily are infrastructure. So we started the company about 4 years ago. We processed about 50 million credentials and have I don't know, around 5,000 builders on the program. So that's what we're focused on.
Hi, Jonathan Chang here, Board of Directors, Zero G Foundation, Zero Gravity. So we are layer one blockchain, a decentralized AI platform. We also do compute and decentralized storage. And we have our own token generated last year, about a few months ago. But you know, crypto field has been kind of up and down, but we're getting there. And that's why we are also encouraging a lot of people to come to our platform to build apps. And we're set aside ecosystem fund for that as well.
And you have two TLDs.
Yeah.
You should say you .agi and .robot both go into ICANN.
Yeah. Thank you.
Fantastic. All right, so we are gonna stick to focusing on adoption of Web3. So I do want to stay on that topic. You know, so not hype, not narratives, real users, real volume, real retention. And you know, the macro backdrop matters, right? We've got Donald Trump, who just, you know, got into Davos, which is exciting. And, you know, he's delivering a special address, meeting leaders, policy signals affecting capital. And so I want to kind of unpack a little bit of that and understand how does that affect, you know, the 2026, you know, macro for the space. But before that, you know, the major sort of backdrop is we're now up to about 24% crypto ownership across major economies. That was a Gemini report. And about 55% of global hedge funds actually hold crypto now, which on average they're holding about 7% of their portfolios in crypto. And we had $47 trillion of stablecoin transactions in the past year, right? So pretty massive numbers. That is actually bigger than basically Visa and MasterCard pretty much combined. So very, very, very interesting. And let's kick off with Jeff. So your company, Identity, acquired a company called Trinsic, I believe, and which is a decentralized identity platform. And so if Web3 adoption is to go mainstream, identity has to get a lot better. So, you know, we've got problems right now. I mean, many of you have seen we've got problems around bots in the space, fake IDs. I mean, you know, but then we're also an industry that's kind of benefited from privacy, right? And there's a huge kind of movement on privacy. So maybe run through, you know, how are you kind of seeing this play out, and where does sort of identity fall in this whole mix?
So let me start by saying that people don't wake up in the morning and say they want to be decentralized. That's not the way the real world works. People wake up and they want to solve real world problems. And so, you know, what we do is we try to abstract the technology. Totally abstract. Nobody wants to know about you know, digital signatures and cryptography. That's not how the real world works. So if you're a consumer and you're a notary, for example, in the US, 90% of mortgages in America are done by notaries that have their identity done with us every year. That's a real world use case. It has nothing to do with DavosWeb3 or, you know, or all the stuff that we think about in terms of, you know, token and coin. It's just a practical use of the technology, of identity technology. The second point is all of this institutional adoption, right? It's all going to require compliance, and compliance has to be built in. So because something is done on chain, a stable coin or an RWA, doesn't mean that it doesn't need to be compliant with the Bank Secrecy Act and FinCEN and the rest of the regulations. So the infrastructure becomes really important. This compliance has to be built in. It has to be atomic, real time. And so that's why we're focusing on infrastructure, because I think it adapts to the next generation of use cases.
But so that 90% you talked about,
Yeah.
like that's not on chain right now, or is it?
Well, it is. It
Okay.
is, right? Because right now there's a pool of 100,000 notaries, right? There's 100,000 notaries that are responsible for 90% of the mortgages in America. Every year they have to have their identity re-verified by us. That's an on-chain activity, right? But the real exciting thing is not 100,000 notaries, it's 30 million signers, right? So what we have to do, like, this stuff takes time, right? It's taken us 4 years to build a pool of 100,000 notaries. But this coming year, we're going to start to work on the signers. So what I would tell everybody is these things don't happen overnight. They take time, and in order to build credibility in these big conservative institution categories, you just have to expect things to take time.
Very, very interesting. I mean, Jonathan, let's move to you.
Yeah.
So, Zero G has been positioned as decentralized AI infrastructure. I believe you've raised hundreds of millions of dollars.
Yeah.
Congratulations.
Thank you.
And what's the playbook to turn that into like a sticky ecosystem? Users
Yes.
coming back every day. What does that look like?
I'm glad you are asking that question because, of course, we need to have a lot more activities, right, on our platform, and by, as I mentioned earlier, we provide about $88 million ecosystem fund to support AI companies that want to develop apps on our platform. You can go to our website, zerog.ai or Zero G Foundation, to find all of that. So, but I'm going to give something that is not published on the website yet because, of course, it's Davos, right? Everything is got to be a little bit exclusive. We're based out of Singapore now, so in our commitment to also working closely with the Singapore government in making AI as a public good and to advancing sort of this sector, we're partnering now with the sports team, the Sports Association in Singapore, on how to use AI to even, to produce a better athletes. That's one. Second, to prevent injuries, and how to use this as even physical implementation of AI, like robots, for example, as trainers. And we're working with not just adults and successful athletes, but really students, young youth, because we want to make sure that even early on they will have the right tools, the right training, and they don't develop bad habits and they don't develop lifelong injuries, for example. So that is a real world case studies that we're developing as of today.
Very interesting. I mean, let's take this a step further.
Yeah.
I mean, as with an extremely successful kind of raise, what are the key drivers that you look at, maybe outside of, because I think the common ones we hear in crypto is just everyone talks about TVL, everyone talks about wallets, nobody knows what it fully means in reality because
either.
everyone's got crazy numbers and it doesn't seem to check out always.
True.
What are the key drivers you look at on this? I want to stick on this topic of adoption, right? So
No, that is the key driver. We want to see a lot more adoptions, right? And look, at the end of the day, marketplace, any marketplace, whether that is Web 2 or Web 3, it only works if you have demand and supply. Because if you have a lot of supply, no demand, at some point the suppliers will just like, well, this is not for me. And if you have a lot of demand, not enough supply, then people got frustrated and they'll move on to another place. So the key here, the balance is to have the right amount of supply and the right amount of demand. This is why it's very important for us to kickstart the process, to think about when we bring in companies to develop apps, it's not just because it's sexy or it's cool and things like that. Okay, fine. But what is the usability of this, right? How is this going to solve real world cases that people will actually use and help us spread? So we look at that as one of our criteria as well when we provide funding. So that is something we want to focus on. And the fact that we have our own token, that is also give a little bit more base sort of, there's a lot of meat. Instead, we're not a meme coin and things like that. You know, it's backed by products, by users. As I mentioned earlier, we had a TGE last year. Right now, our token is worth about $750 million. Hopefully, with a lot more products, a lot more adoptions, that number will go up.
Can I just jump in here? I just want to make the point that about 80% of on-chain transactions are with unverified counterparties. And so the more traditional finance, traditional financial service products that come on-chain, that number's got to change because it's on-chain doesn't mean that it's not compliant, right? So digital assets on-chain are still going to require, BSA compliance, FinCEN, SEC, commodities futures. So you got to think about the growth here because 80% of transactions are unverified, and crypto is fine if it's pseudonymous or anonymous, but regulated financial transactions aren't.
Very, very true. I want to move over a little bit to, one of the big problems I think in Web3 that I'm seeing. I think a lot of the growth in reality in this space has been incentive driven, right? Which is not common in the Web2 world, right? Like you don't typically pay your customers to be part of your ecosystem. And that's very much a real problem. And I'm sure everyone can think of plenty of companies in this space that are essentially paying their users. And that's in all sorts of forms. You see airdrops and all sorts of other things. And some of us have actually made a lot of real money. If any of us were part of the Uniswap or other, there's been some pretty good airdrops over the years. But it's a problem, right? And so how are you, thinking about this, Jeff? I mean, you're kind of in a spot where it's a bit odd, right? Like identity is kind of probably part of that solution to get rid of that problem around the airdrop problem, understand who these users are, maybe understand other key demographics or other things, drivers, wealth ranges or salary, things like this. And so how are you thinking about it? Why are we not there yet? Why do people still have to do KYC on 50 different products every year?
Well, those are separate questions. What I would say is I completely agree with you. Adoption and incentive. Adoption isn't real adoption if it's all incentive driven. And so a company like ours, which we're really a Web2 company. Our largest investor is AARP, 40 million members, the American Association of Retired People, a real world company working on real issues like solving romance scams and things like this. Those are the use cases we focus on. Notaries, the National Notary Association. So if you look at our company, you're going to say, Jeff, you have the most boring company. It's notaries and old people. Well, you know what? These are real world people, like real world use cases. And so we've never fallen into the you got to pay your customer strategy and trap.
But what's got to change for the rest of the space? Like more mainstream, more people using it.
Yeah, frankly, historically, blockchain has been degens, crypto natives, right? And the reality of the next billion users is non-crypto natives. And so we have to find ways to expand the on-ramp, right, to people that are everyday use cases. And by the way, people don't even know they're on-chain. It's not like people want to be on-chain. It's just that blockchain is an effective use of service delivery. We didn't talk about SQL like when we were building companies in the web. It's just a system. So we have to find ways that are to onboard users into Web3 that aren't complicated and crypto based.
So I agree. Like that, the user experience is pretty horrible on most products.
Yeah.
You end up with wallets, secret, phrases, all sorts of other stuff, gas fees.
Right.
Like how? Maybe we can go. We can switch it. But how are you guys looking at that? How are you guys simplifying it? How do you sort of bring this more mainstream?
No, I couldn't agree more. Look, I'm new to the sector, to Web3, right? So I was one of those people that all of these terms, they don't mean anything to me. I didn't understand it. So what I needed to do, even on my own, I need trying to find the equivalent of the system in the Web2 or in the real world so that I can understand it better. So maybe that is at some point, that is the responsibility of all of us in the sector to make the languages, the terms, the systems, the processes as universal as possible so that people understand it, right? Like, that it doesn't matter whether you're coming from Ghana or Senegal or India or China or US or Indonesia, you'll be able to connect. Now, the flip side, I mean, not the flip side, but the good thing about Web3 so far is that the diversity of the people that work within Web3 and the users. So there is already the elements of the diversity. There is already elements of the universal language, just that we just need to be consistent about it. But I agree with you. We need to move away from some of the jargons, but maybe some of the jargons because they want to sound cool.
I think this is where like stable coins in reality have kind of come in as well. It's like kind of in some ways, the killer use case in crypto so far, where 46 trillion transacting. It's because I think there's two kind of key things. I think one, you can now move money anywhere instantaneously, and you don't even know. Like a lot of these companies, like Credit, who's not here. There's many other companies that you can move money instantaneously, and you could send money home, $200 a month, and do it for much lower fees, about a third of the fees that you might do it with Western Union or some of the other players like MoneyGram. And it's instantaneous, right? There's no risk. There's no fraud risk. I'm sure some of you have seen like some of these fraud risk numbers and fraud that happens from some of the World Economic Forum and World Bank reports around remittances. And so, one of the UN SDGs is, how do you bring that down to below 3%? And this makes a big difference, right? This is money at home that people can feed their families with go to, pay for school, things like that. I think one of the other big things that maybe is thought-provoking, you think about this a little bit after, but one of the things I've been kind of thinking about is I think we're in the first time in human history where if you're in a country where you don't trust your government or they're printing a lot of money, democracy doesn't solve that. But voting with your wallet, taking your money, if you're in Nigeria or Venezuela or whatever, and maybe you're holding US dollars instead because you're holding USDC or USDT, is actually a very impactful thing, because if you opt out of your own central bank, that country will collapse. It will change. Like that, you can drive change from that. You can't drive change generally with votes in some of these countries because it may not even be free and fair elections. And so I think this is going to be the fascinating thing over the next decade that I've been really interested in, and I think stablecoins kind of comes into play there. And some of these other things too, right? Like identity and some of these other things are going to all start coming into play.
The thing that you're talking about, that's a real problem, right? And so, with the adoption of new technology, typically it solves the old problem first. Fake problems, not really real problems. And then it evolves, just like the web did, it evolves to real problems. And so what I think we're seeing now is how blockchain can solve real problems, right? I mean, gating a Discord server with an identity credential is not a real problem, right? That was the first version of Web3 identity. It's not a real problem. So these types of issues are real mega problems where identity is a requirement. It's going to be a requirement to have a portable,
I'm going to go off script a little bit. I mean, we got a billion people in the world that basically don't have identity or underbanked. This is a huge problem. I'm very passionate about this because I think while KYC and AML are great and we need these things, we do have a problem if we say that, hey, the existing system cuts out a billion people, like whoops, that is a problem. Right. Like, how do we fix that?
So I'll tell you how we fix it, because with AI, right, the mobile phone verification and the plastic credential is going to be obsolete. You can't. That does not defend against new AI technology. So ultimately, you have to build a peer-to-peer network. Peers verifying peers. It has to be people to people, because that's the only way that you can really guarantee who somebody is. So a peer-based identity system and reputation management system, I think, is ultimately going to be important.
Is that like social scoring or?
No, it's not like social scoring. No. But it's like I'm willing to bet money that you're a real person, kind of stuff. Yeah.
Can I add something though? I think, and I see the arguments of both sides, right? And I have to say that from my observation, there's a lot more countries now moving in that directions because the selling point, it is not just about also that we can tax you or that we know that you make money, but it's actually even for social benefits, social sort of social, what is this, assistance. When COVID happened, there's no way for people to go to a physical government branch to collect money, right? It has to be transferred because there is a disease and lockdown and things like that. So I've seen it, there is an acceleration of digital transformation within the government sector. So verified ID could be, or maybe it is one of them, so that it's a lot easier, a lot more secure. There is a transfer of social assistance that people, even though they are in remote places, will be able to do that. And I've seen even in our neighboring country in Indonesia. Indonesia is a huge country, but it's very spread out. It's 17,000 islands, right? So, I mean, Singapore, we're both based out of Singapore. And we only have about 64 islands. And by the way, a lot of people do not know that. But Indonesia is 17,000 islands. So anyway, what I'm saying is that at some point, this is probably where it's going.
Interesting. Okay, so I wanna move towards wrapping up a little bit and talk a bit about macro as we wrap up.
Yeah.
This week, I don't know if you've been following, but Japan's 40-year government bond yield just pushed above 4%. Pretty scary stuff. For context, in 2020 was 0.62%. There's different estimates out there, but they're saying potentially up to even 55% losses on bonds that are being held. A lot of U.S. banks hold these. Japan holds a lot of U.S. treasuries, over $1 trillion. They hold a lot of U.S. equities and ETFs primarily. And maybe that's the catalyst. Maybe it's something else. But how are you seeing 2026? What does this mean across different aspects for Web3 adoption, for capital?
Right. I mean, I see a couple trends. I see tailwinds, regulatory tailwinds. I mean, you see some incredible things coming out from the SEC and the Commodities Trading Board, which is basically fully endorsing digital assets on chain, and so that's a huge tailwind. And then the second thing I see is massive enterprise adoption. The rate of enterprise adoption, stablecoin and otherwise, over the last 3 months has been incredible. And so it's happened much faster than I expected. And so what has to happen now, and talking with some of the folks out here, we don't know if we need to be compliant or not. Basically, is basically what people are saying. So what has to happen now is compliance has to catch up with some of the activity. So from my perspective, as a guy who's running an identity business, I see tailwinds all over.
But I want to understand that. So compliance needs to catch up. I mean, isn't this where there was a lot of complaints in this industry? Biden administration was going after a lot of crypto companies. It was stifling innovation. I mean, isn't that enforcing and driving compliance? I'm curious.
Well, look, all this activity that's happening right now ultimately is going to require compliance, but it's happening right now without compliance, right? So, the fact that it happens on chain doesn't negate the regulatory framework of BSA and FinCEN and all the other regulations that governing things in the U.S. So, the acts that are coming out from Congress are going to address that.
I'm very well. I and also at Zero-G, we're very bullish on the adoption of Web3 in 2026. And maybe I'll add a little bit of flavor from even a regulatory perspective. And I'm going to speak it from Singapore where we're based, but I'm sure this is applicable to other countries as well. There are three things here. There's three trends that I've seen in Singapore moving forward. One is that there is a transition from being crypto friendly to value added type of solutions. And what that means is then, let's have some sort of regulatory on top of it to make sure that it's transparent, accountable, and that there is value added to the society. The second part is from trading coins to tokenize real-world assets. And we've seen it also within the financial sector in Singapore, working with the banks, major banks, there's a tokenizations of mutual funds and bonds and things like that. And last but not least, again, moving away from blockchain-friendly to anti-speculations. Because if we want to embrace Web3 and all of the different elements, and we want people of all ages put their retirement money or investment, then it gotta be safe, right? Because we don't want people losing their money over speculation.
Absolutely. I mean, there you have it. I mean, we've talked about 46 trillion in stablecoin transactions. I mean, we're seeing how identity becomes critical to parts of that, especially if we start talking about even RWAs and all the tokenized assets that are starting to happen. I mean, when you look at what you guys are doing with AI, it's pretty incredible. How you're helping to move the industry forward, and we're all rooting for you. And one of the hot projects I think over the last year that actually did kind of buck the trend. And so great job and congratulations. And let's give a round of applause to our amazing panelists.
Yeah, thank you.